Good morning, afternoon, and welcome to our deep dive into Frasers Centrepoint Trust, FCT. FCT is one of Singapore's leading retail real estate investment trusts, distinguished by its strategic focus on high-quality, resilient suburban retail malls. The portfolio, FCT's strength lies in its portfolio of primarily 9 prime suburban retail malls across Singapore, alongside one office property, Central Plaza. These malls, like Causeway Point, Northpoint City, Waterway Point, and Nex, where FCT holds a 50% effective interest, are considered essential services hubs. They benefit from stable, large catchment areas and continue to be the heart of community life, insulating them from some of the volatility seen in pure tourist or CBD retail segments. 2. Latest financial and operational review, FY2025, visual, key financial charts highlighting gross revenue, NPI, and DPU growth. FCT has recently reported a strong set of results for the full financial year, FY, ending September 2025, driven by both acquisitions and organic growth. Key financial figures, FY2025, gross revenue saw a healthy double-digit increase, rising by 10.8% year-on-year to approximately 389.6 million Singapore dollars. Net property income, NPI, followed suit, growing by 9.7% to 278 million Singapore dollars, showcasing effective cost and asset management. Distribution per unit, DPU, for the full year inched up to 0.12113 Singapore dollars, a marginal but steady increase, reflecting stable operations. Operational highlights. Committed occupancy remains exceptionally high at 98.1% across the portfolio, underscoring the strong demand for its retail space. More impressively, FCT achieved robust positive rental reversions in the latest half, in the range of nearly 7.8%, indicating the management's ability to command higher rents and the continuing strength of the suburban retail market. 3. Strategic activities and growth drivers. Strategic acquisitions. The major highlight is the acquisition of the Northpoint City South Wing, which gives FCT full, 100% ownership of the integrated development. This move is DPU accretive and is expected to unlock further value through integrated management. Asset enhancement initiatives, AEIs. The successful completion of the Tampines 1 AEI and ongoing works at Hougang Mall are key capital recycling activities that modernize the malls and boost their rental income and valuation, with Tampines 1's project yielding a healthy return on investment. Debt profile. The trust maintains a healthy balance sheet, with aggregate leverage at a very safe 39.6%, well below the regulatory limit of 50.0%. Furthermore, a high percentage of borrowings are hedged to fixed rates, mitigating interest rate risk. 4. Forward projection and outlook. Looking ahead, the outlook for FCT remains positive and anchored by local fundamentals. Projection. The management is well positioned to achieve sustainable organic growth, driven by the full-year impact of the Northpoint City South Wing acquisition, positive rental reversions, which will continue to feed into higher gross revenue. Resilient domestic consumption, supported by stable employment, population growth in the mall catchment areas, and supportive government disbursement schemes. The market consensus for the 12-month share price target currently hovers around 2 Singapore dollars and 55 cents, with a majority of analysts maintaining a buy or hold rating, supported by a stable dividend yield. 5. Investor action points. Income-focused investors can view FCT as a reliable source of stable distribution income, underpinned by its resilient suburban retail portfolio. Growth-focused investors should monitor the successful integration of Northpoint City South Wing and the financial returns from ongoing and future AEIs, as these are the primary drivers for capital appreciation and DPU growth. The management is well positioned to achieve sustainable organic growth, driven by the full-year impact of the Northpoint City South Wing acquisition, positive rental reversions, which will continue to feed into higher gross revenue. Resilient domestic consumption, supported by stable employment, population growth in the mall catchment areas, and supportive government disbursement schemes. The market consensus for the 12-month share price target currently hovers around 2 Singapore dollars and 55 cents, with a majority of analysts maintaining a buy or hold rating, supported by a stable dividend key risk. While the debt profile is healthy, the cost of debt will remain a factor to watch, even with high hedging levels. In summary, Frasers Centrepoint Trust has demonstrated a strong track record of operational stability and strategic growth through accretive acquisitions and asset enhancements, solidifying its position as a cornerstone suburban retail REIT. Disclaimer: information in this video is educational purpose only and not financial advice. Thank you. Subscribe and like to support channel.